Surabhi Upadhyay. Well, the market has fallen into a bit of a range once again. That upward momentum has been truncated in the last two sessions. Part of that perhaps can be ascribed to the way the earnings season has kicked off. Yes, we had that nasty shocker come in from both TCS and Infosys, and the market's now wondering what lies ahead. Well, today we're going to spend the next 10 to 15 odd minutes looking completely at the earnings picture, because that seems to be the critical litmus test for the Indian market. Joining me today on the show is Gurmeet Chadha, someone, of course, who looks at a range of stocks, sectors, market trends, pretty much across the board. Gurmeet, first of all, hi and welcome to our digital special. This is your first appearance, and we hope to see more of you over here.
Thanks for having me, Surabhi. Always a pleasure.
So, Gurmeet, you tell us, one was thinking that at least the start of earnings season usually is very nice, right? It's a no-brainer. IT companies come, deliver mostly on expected lines. This time, it has been different. How are you looking at things, and would you say that earnings, that is Q4 earnings and the commentary, that is indeed a very important cue for the market now?
Absolutely. Earnings are important, and as you mentioned, we got a bit of a negative surprise from Infosys. It was expected that Q4 is a seasonally weak quarter. We were seeing some stress in BFSI, which a lot of commentary indicated. Demand environment was uncertain, but I think uh, the extent of clamp down on deals and delay actually affected sentiment. And I think now probably the heavy lifting has to be done more by financials, which are almost one third weight in the Nifty, probably a little more than that. And the credit growth has been very healthy. And mind you, we are at 18 times earnings, right? So any earning disappointment can further derail the recovery in markets, which has been a tough 18 months. If you see October 2021, we were at 18,600. It's almost been 19, 20 months, almost 2 years of flat to negative returns. So in my view, earnings are extremely important. And the fact that our corporate profitability to GDP has been at a low is showing signs of pickup. So whether this nominal GDP growth, which is 7% GDP and about 5-6% inflation, can translate into 13-15% growth in EPS is extremely important, for the markets to start doing well.
So, Gurmeet, just to go over the numbers, at a broad level, what kind of overall numbers were you expecting? Let's say from at least the big ones, the Nifty 50 or the earnings universe that you look at specifically, because we've been getting into this rut of earnings downgrades for quite some quarters.
So, Subhi, one thing which makes India command a premium over last few years has been if you look at Nifty 100, the number of 10 baggers in last 10 years, right? Which is a sign of how, the markets have done. In India's case, for last 10 years has been almost 20%. This is about 13-14% for NASDAQ. It's about 7-8% for China and about 10 odd percent for S&P 500. So our ability to translate growth to corporate market cap improvement is high, and that's the reason India always commands a higher multiple versus other EMs. So I think our expectation was that we'll see at least a good healthy double-digit EPS growth this quarter. IT would be probably soft, and financials and old economy stocks, energy, utility, industrials will probably do the heavy lifting, maybe a bit of auto, right? And with some margin improvement, even the consumer good companies through better margins, should bear the brunt. So now with IT actually now expected to negatively contribute, I think it's very important that financials deliver good numbers. We saw HDFC being slightly muted. I mean, and the market response has been also accordingly slightly muted. Probably we'll have to see the others now, which are due this week and next week.
Oh, yes, and we'll just put up the names for our viewers there. We really start getting to the thick of the season. You have ICICI Securities, for instance, tomorrow. CRISIL has reported. Today we'll hear from Schaeffler, Tata Coffee. Later in the week, Reliance is on Friday, of course, and Saturday is again busy. It seems the banks are picking Saturdays to report their numbers. So it's ICICI Bank this time after HDFC Bank last Saturday. So plenty of numbers ahead. But Gurmeet, let's now deal with the elephant in the room, and that's the IT shocker that we've got. It's two companies now. There are many more ahead, but these are the two biggest IT services companies of this country, right? And both have reported pain, especially Infosys with these deal cancellations. What have you made of all of this? What is your stance? Are you changing your approach to IT stocks, at least for the near term, near to medium term?
Zubhi, I'm neutral right now. I would probably want to hear more commentary from HCL Tech, like Tech Mahindra. Uh,
Yes,
sorry,
yes.
sorry,
Carry on,
some
Gurmeet. We
background
can hear you.
disturbance. Yeah. So we would like to wait for the commentary from HCL Tech Mahindra and even some of the ERDs. So if you look at Infi, for example, Infi had a lot of digital transformation deals. If you club that, they in fact used to highlight that digital is almost 61% of the revenues. 40% revenues from geography was North America, which is where the stress has been. In fact, Europe has been surprisingly more resilient, unlike the popular perception. And if you see the deal wins, the TCV, which is about a little over $2 billion, the new were only 21%. Which clearly tells you that there is even the pipeline looks a little uncertain. So I think I would want to see whether this is more impact has been more on Infosys and maybe other companies are more flattish. I think that will give market some respite. So, for example, Tech Mahindra has very little exposure to BFSI. HCL is far more diversified with a combination of IT services, product and platforms, ERD, etc. A little more diversified than the other IT companies. So I would want to see that, and also mid-cap IT because that's where the correction was steep because they were trading at very high multiples. So I think pose them. For now, I think it's good to just lie low because sometimes the price action is so severe that it discounts 1 quarter, 2 quarter of earnings. So we overall, if you see tech adoption as a percentage of GDP, which is only going to go up this decade. Uh, yeah, so whether you're moving to cloud, whether you're adopting new age technologies like AI, whether you're adopting automation deals, I don't think so. Long term, there is the structural demand drivers for digitization and use of technology don't change. But for few quarters, because the markets can be very erratic, in terms of responding,
Okay.
can be volatile. So I think it's good to right, just wait and watch right now, and then take it as it comes.
So I'm guessing you have not rushed in to buy this dip. That's the sense I'm getting, hearing you. You're on
No,
the
no, no.
sidelines.
Yeah, no, no, no. We have some exposure. We are maintaining that right now among large cap. We have in TCS. We have some mid cap names. So we are maintaining exposure. We are not trying to simply. You don't have to take decisions on a daily basis in markets. So learning.
I think
Uh,
that's extremely wise and very very sane advice. One doesn't have to act on a daily basis. Sometimes it's just okay to sit out and observe. I think that's a point well taken. Let's move to the next then. We've discussed IT, which has been the clear negative, disappointment. Are you expecting any pleasant surprise? Can any sector, any set of companies spring, a surprise on the upside?
I think two, three pockets in my view can spring surprise. One, I think, is the entire housing, including real estate developers. So we've seen very robust pre-sales by DLF. We've seen that with Macrotech. We've seen that some of the South-based developers, especially the affluent end and the luxury end. I think they have not only met, they have in a lot of cases exceeded the pre-sale guidance they gave. And despite high rates, I think the pre-sales continue to do well. Another pocket which I like within this is this housing finance companies which are more into affordable housing, and
He
couple of
himself.
names which have really done well is Home First, for example, 3.8%, almost 4% ROA, 15% ROE. Uh, First 2 quarters due to COVID, there was disruption. After that, I think they beautifully scaled up digitally. In fact, they were the first ones to actually use Salesforce, for loan origination and integrating both CRM and LMS, which is the lead management, on the cloud platform. They've been able to do very well with the connectors and the influencers in terms of origination and great turnaround time. And affordable housing is one segment which needs very good credit underwriting. If you see their stage three assets also less than 40 bips, tells you about that how good the credit underwriting is. And smaller ones can deal with can do better because the larger NBFCs and HFCs will deal with banks when it becomes very competitive. These guys can manage few territories and manage 4-5% yields. I like the other building material space, cables and wires, CVC pipes as well. And one pocket I think can surprise is also, FMCG. I think the wholesale inflation numbers are consistently down. Raw material prices are soft. They are commodity consumers. A lot of that will probably reflect in pricing, hopefully with some uptick in rural demand.
Okay, so housing related sectors like housing finance companies and FMCG. So we're going to watch out for these areas. Also talk to us about pharma, Gurmeet, because when we were discussing this just before the show, you said that pharma is a space where things seem to be changing for the better. Tell us the factors that make you convinced, and any specific companies, any stocks that you would keep on your radar.
Two, three pockets I like. So, one is, I think one is this beaten down CDMO names. It's been almost a 40-50% price correction in a lot of names, including the marquee ones like Divi's, Laurus, etc. I think what is happening is that we have to look now at companies which are creating capacity, right? A lot of the supply chains will get closed over next 2 years, and once you are part of that, once you are part of the innovator and the MNC pharma, then the runway is for 5-7 years. If you see the stage 3 molecules, they are currently about 155, 160. And the success rate after stage 3 is almost 55-60%. So a lot of that will probably come to India. Some of the names, which I'm not right now, I have no idea in terms of how much will come. But once that comes, we have seen the business is very lumpy. You can straight away add $50-100 million, on a quarterly, even in some cases monthly basis. We saw that with Molnupiravir when COVID happened, that how it added almost 200 million to the base. So this pocket I like. We like Laurus also. What I like is their focus on R&D. Almost they have out of 6,000 employees, they have 1,200 scientists, almost 20%. Not seen many pharma organization. And I think within CDMO, this novel CDMO, not the generic custom synthesis, is of value. This is a long-term view, obviously not 1 quarter, 2 quarter. I also like some of the branded generics, some of the pharma companies which have no dependence or very little relation with US and there is pricing pressure, although the pricing pressure is also down. One of the IPO probably which will come next week is Mankind Pharma. It's almost like an FMCG of pharma with almost 4 lakh doctor coverage, second highest by prescription after Sun Pharma, 8,000 crore kind of a top line, 1,500 crore PAT, good return ratios. That's something which you can probably look at as and when we come to it. Also, we look at some of the within more custom synthesis companies which are doing custom synthesis 360 degree, not just confined to to pharma alone, but agrochemicals, renewable chemicals, etc. So that's one space I'm really watching from a very long term perspective.
Okay, those are lots of ideas, lots of names. Of course, these are companies that Gurmeet is looking at closely. You, of course, will be doing your own homework, I guess, with your own financial advisors as you go and look at the possibility of investing in these stocks. Gurmeet, I just got thinking while you were talking about manufacturing in India. The big event here for us in Mumbai, of course, is this grand Apple store opening. And I think you guys in Delhi will have, the Apple store, it's day after tomorrow, if I'm not mistaken. So much hype and enthusiasm, right? And I guess it's saying something. Mr. Tim Cook personally present here for the store launch, big plans in India. I don't know if there's any way of playing this because a lot of the Apple manufacturers are obviously not listed. But what does this tell you? Can you extrapolate anything in terms of joining the dots and taking that into an investment thesis in terms of playing the whole Make in India theme?
No, it's very significant, and we saw Tim Cook even meeting some of the industry veterans yesterday, including Mr. Ambani, Chandra, etc. And if you see the current mix of mobile exports will be almost $11 billion of exports, more than 50% is Apple. So if Apple can source $6-7 billion, export $6-7 billion from India, and eventually is targeting a much bigger number, almost 3 times of this by 2025. It tells you a lot of bigger players will also now start looking at India as as a factory. So I'm particularly very keen because Apple is high precision, high quality manufacturing, right? So a lot of global names in. So I think one is electronic manufacturing services, which makes me very gung-ho on this space. Although there are no immediate things as you rightly pointed out, because Apple suppliers are different. But I think a lot of this will happen over a period of time. Also, there will be spillover effects on a lot of other sectors. We discussed CDMO, we discussed chemicals. You will see probably a lot of that in textiles, in in auto. India is already very, very strong in auto ancillaries, right? A lot of components we make. So there'll be a lot of action there, and our interaction with a lot of entrepreneurs on the ground also suggests that there's some capping which is happening on further investments in China, right? And how much do we stand to gain? I think only time will tell. But I think in few pockets we are already seeing these signs.
So are you queuing up at the store for a new iPhone, Gurmeet? I don't know if you're an Android user or a Apple user, but I'm just wondering, are you getting yourself a brand new iPhone from the India Delhi Apple store?
Not immediately, Surabhi. I actually bought one recently. So I'm in the Apple ecosystem, and that's what makes this brand, So once you get into the system, it's very difficult.
You're never, yeah, you can, check out any time you like, but you can never leave. It's like that, right?
Yeah.
All right, Gurmeet, pleasure having you on this conversation. Thank you so much for joining in and sharing quite a few of these ideas along with an earnings outlook for our viewers. Thanks for joining in.
Pleasure. Thanks.
All right, and with that, it's a wrap on this edition of Who Moves the Market. Thank you very much for being with us. Keep sharing your feedback, comments, queries. See you again tomorrow.